Hi everyone, welcome back to the US individual taxation classes. This is part 3 of applicable tax credit. So this is the last part of the applicable tax credit. In this particular video, we'll be understanding in detail about investment credit for rehabilitation. Then we'll be discussing about the work opportunity credit, and then after, the next topic we'll be covering is the research activity credit, and then low income housing credit, disabled access credit, earned income credit. So these all credit we'll be discussing in this particular video, plus we'll do some practice question as well. So let's dive into for more detail and finish off the applicable tax credit. Hi everyone, welcome back to the US taxation class. So before the break, we have discussed a couple of tax credits, right? So now we'll be continuing the same, and I think we have covered 5 of them out of 8. So we'll be finishing off rest of the 3 tax credit, and after that we'll do some practice questions, right? So let me present my screen and take you through what all we have done. So far we have covered till foreign tax. So we have covered 7. Okay, so quickly let me scroll through all the tax credit. Yeah. So we did for child tax credit, we did for child and dependent care credit. Then after we did for credit for elderly or disabled people. And then we have cracked credit for adoption expenses, credit for contribution, and then we invested good amount of time in understanding education tax credit, which is like non-refundable tax credit. There we studied both of them, both like American opportunity tax credit and lifetime learning credit. And then lastly, before going on a break, we finish off foreign tax credit, and we have done certain example for that also. Now we are jumping on to the general business credit. So this one is common for individual taxation as well as your business taxation, which is your second part of examination. Because like I thought to kept it here so that, like there might be a possibility like individual might be doing business as a sole proprietor or partnership or in S corporation. So maybe in that case, it may hit your individual taxation exam. But more important, this is for business taxation part, which is your part 2 of the E exam. So but let's crack it out here only, and then it will be more of revision when you do it with the business taxes. Right. So general business credits include like 6 category of credit. One is investment credit, that is for the amount you pay for rehabilitation, that is like capital expenditure you make for the rehabilitation of your office or something like that, right? So that one is investment credit for rehabilitation, where you are doing like overall renovation of your facilities kind of thing. Second one is work opportunity credit. So that is more from like employer side who are providing opportunities to certain category of employee. Third one is research activity credit. When you do investment on research and innovation, you get certain tax credit. Then D is low income housing credit. So this is majorly for the construction companies who help in building or who build like housing society for lower group of income people. The next one is disabled access credit. This is for investment as an employer we make for disabled people. Like in US, I know like Shubham, you was there, so you might have seen like almost in all shops or all you can say offices, there are separate parking lot for disabled people, right? So you might have seen like the separate, you can say, entry and exit for disabled people, right? So all those expenditure that company make, so they get certain tax credit for those to helping disabled people, right? We'll be discussing more in detail. And then last one is employer provide childcare credit, where like the company like EY, PwC, and all this big company, they have a separate, child care facilities in their office where employee can drop their kids over there, and there are nannies and all, you can say, stuff for the kids to play around is being there, and all these facilities is being provided by the employer, and what all tax credit as an employer we get, right? So that's the reason I said this section is more related to business taxes, but it may be possible you are running a business as a sole proprietor or partnership, and you might be investing and doing all these things, then you can also avail the tax credit on those respective areas, right? So total deduction for considering all these six things would be comes under the general business credit, and which is like lower of your regular tax minus AMT, alternative minimum tax, or 25,000 plus 75% of regular tax minus 25,000, whichever is lower, right? For example, let's say your regular tax is, let's say, $100,000, and your AMT, alternate minimum tax, is, let's say, $50,000. So first point is 100,000 minus 50,000, that is $50,000. Second is $25,000 plus 75% of regular tax, which is $100,000, minus 25,000, which is 75,000, multiplied by 75%, let's say 37,500 plus 25,000, that is around $62,500. So whichever is lower, so 50,000 is lower, so maximum deduction for all these six category, or maximum credit for all these six category, will be $50,000. Did you understand, or shall I write it on whiteboard? Yes, no? Kuch to bolo. Have you got the example, what I said, or do you want me to write in the whiteboard?
No.
Okay. So now any unused credit may be carried back for a period of 1 year and can be carried forward for 20 years. So carry forward, we all know, like if like today my tax liability is less compared to the tax credit, so whatever is the difference, I can carry forward for the next year, and in the future tax liability, I can reduce that amount up to 20 years. So carry back means, like, in the previous year, if you have gain and if you have paid taxes, then you can claim the refund for that. Does that make sense?
Yes, sir.
Right? Or maybe let
Can you
me
say
draw.
that again, sir? Can you repeat?
Yeah, let me draw it for you. Let me draw it for you. Otherwise, some people understand, some may not. Can you all see whiteboard?
Yes.
So here, like, first, let's understand the initial example we were discussing. So your regular tax is $100,000, right? And your alternate minimum tax is $50,000. So the A point says regular tax minus AMT, which is 50,000, right? $50,000. Or B point says, what B point says? $25,000 plus 75% of regular tax, $100,000 minus $25,000. How much is this? Can somebody help me in doing the math?
is 82,250 plus $25,000.
So
I
this
think
is 81250. Have I done the math right? Is it time to your math?
Yes.
So whichever is lower, that is 50,000. So maximum tax credit for general business is 50,000 you can do, right? That is the first point which we understood. And the second point, it says any unused credit may be carried back 1 year and carried forward 2 years. So for example, this year your tax credit is 50,000, right? And this tax credit you will be reducing from regular taxes. So in this example, it's not getting fit. But let's take another example. Example 2. Example 2 says your regular tax is, let's say, $100,000, and now you have general business tax credit of let's say $250,000. So your general business tax credit is $250,000. So in this year, you can consume maximum how much? 100,000. So your carry forward will be $150,000. That means you have more tax credit than the tax liability payable by 150,000. Yes, no? Yes, no? Guys?
Yes.
Yes, everyone. So this you can carry forward up to 20 years, right? And you can carry back up to 1 year.
1 year.
That means this we all know, right? Carry forward we all understand now. We have already discussed a couple of examples, right? So what is carry back? That means if in previous year your tax payable was, let's say, $100,000. So from this 150, you can carry back $100,000, and you can make your liability zero. And if you have already paid this, then you can claim refund. Make sense? So if in the previous year you have already paid the tax liability, then from this carry back of 1 year, you can update the previous year return and claim the income tax return refund of $100,000. Make sense? That is called carry back.
Yes,
Any
sir.
doubt here?
No.
Rajat, Mayank, Vivek, everyone good?
Clear, sir. Clear.
So now, now coming to the first point. So so far what we have discussed is at consolidated level called general business credit. Now in the general business credit, there are 6 categories of credit. So we'll be discussing one by one. So first of all, we discussed like overall how much tax credit is being available, and from that tax credit, how you can utilize against the current tax payable. And if it is more, then how much you can carry forward and how much you can carry back. If you carry back, then you can claim the refund as well, right? This is what we understood so far. Now we are jumping one by one into the respective category, which is comes under the general business tax category. The first one is investment credit for rehabilitation. If this credit is being allowed to the taxpayer for making an expenditure to rehabilitate old commercial building to the new building, or any industrial building to the new building, or to certified historical structure like museum or historical buildings, etc. Right? So any expenditure you made for the rehabilitation of old commercial or industrial building to revive that to the new building, right? Or if you are making any capital expenditure on any historical structure like museum or historical building or something like that, right? Then you are being eligible for the investment credit for rehabilitation.
Sir, good evening.
Vikas sir, can you hear us?
Yes, sir. बढ़िया. With तबीयत
Sir,
ठीक नहीं
I know you are Badia, but put on mute. People do not concentrate. Huh? So next thing is credit. So how much tax credit you will receive? That is 20% of expenditure utilized equally over the period of 5 years. Right? That's a drawback of virtual meetings, or you can say virtual class. People get busy in their own way. Okay, sorry about that. So like credit is 20% of expenditure utilized equally over the period of 5 years. So whatever is your tax credit, right, you can avail only 1/5 in a particular year. So you'll be taking the overall credit over the period of 5 years. So let's see this example over here. Investment to rehabilitate an old commercial building was $1 million, right? The investment credit is, maximum credit is 20% of the capital expenditure, that is $200,000, right? And then this $200,000, if you are availing tax credit, then you need to reduce the asset base because you cannot take double tax benefits. So if you are keeping the same asset base, then you will be taking the depreciation benefit, right? So if you are taking the tax credit, you need to reduce the asset base and you should not be claiming the depreciation expense on that amount which you have taken as a tax credit. So that is the reason from the tax base, it will reduce whatever the tax credit you are planning to avail. So now future tax base is $800,000 instead of $1 million, right? So on 800,000 asset base, you will be depreciate over the life of the building. Let's say it is 39 years, then straight line basis or 39 years, right? And investment credit is $200,000, but that you will be utilizing over the period of 5 years. That is 200,000 divided by 5, that is 40,000 every year in the period of 5 years. So that's how you'll be utilizing that investment credit for rehabilitation. Make sense? So first question is, to what category of capital expenditure this rehabilitation credit is allowed?
1/5, sir.
Say that again.
1/5, sir.
No.
Or
I'm saying what category of investment or expenditure this credit is allowed.
Commercial and industrial building.
Say that again.
Commercial and industrial building.
Yes, commercial and industrial building or certified historical structure, right? If you are making expenditure on the rehabilitation of old commercial buildings, industrial building, or the historical structure, right? Then only this investment credit for rehabilitation is allowed, right? How much is it allowed?
Unlimited.
20% of the expenditure you have made, right? Third question is, if you are taking the tax credit, how much money you need to reduce from the asset base? If you are taking tax credit, then how much amount you will be reducing from the asset base? Because
Sir, base is the same as
Investment credit.
investment credit. Investment credit, sir.
What is investment credit?
Sir, how much we have invested
20% of the expenditure. 20% of the expenditure.
Yeah, no, I'm asking to Vikas. How much is investment credit?
20%, sir. Credit is 20% of the expenditure utilized equally over the period of 5 years, sir.
So what kind of investment expenditure are being eligible for rehabilitation credit?
Type of expenditure.
What type of expenditure?
Sir, in the expenditures which are incurred to rehabilitate old commercial industrial building as well as certified historic structures.
So what are old commercial building and certified historical structures?
Historical monuments like monuments, historical building, church, temples, etc. and all historical. और ये commercial हो गए सर, जितना भी नॉन रेजिडेंशियल बिल्डिंग ऑफ पर्सनल है, ऑफ पर्सनल यूज है, कोई सोसाइटी है वो बेकार पड़ी है बहुत टाइम से, आई गेस, तो उसको रिहैबिलिटेट करना है फॉर कमर्शियल यूज, तो वही होगा मेरे ख्याल से सर ये.
And to how much years you can avail the benefit of
Sir, 20 years.
credit?
Sir, 20 years forward or 1 year back.
ऐसा कुछ है? How about others? How many years we can take tax credit? How many years we can take tax credit for investment credit for rehabilitation?
Carried back 1 year, forward 20 years.
I heard your answer. I'm just talking to other. How many years we can take credit of investment?
So 5 years.
For 5 years? How about
Yes, sir.
others? 5 year or 20 years? Mayank?
Sir, I also just read 5 years, that usually you utilize usually over the period of 5 years. So it's written. So my answer will be for 5 only.
Yeah, Garima, Rajat?
So 5 years.
But how you will be utilizing over the period of 5 years? How we will be utilizing over the period of 5 years?
20% each year.
20% each year.
One-
So yeah, if for example, $1 million we have spent, so 20% of that is being allowed as a investment credit for rehabilitation, right? So that is $200,000. So out of this $200,000, how much tax credit we can avail in current year? 20% of $200,000, that is $40,000. Yes,
Yes.
no, right? And rest of the $160,000 we will be utilizing in equal installment in following 4 years, right? Make sense? Because
Like $40,000 every each year for the 5 years of period.
yes. Hanji, because make sense?
So there is no limit on the expenditure incurred to
Yes.
rehabilitate commercial buildings.
Yes.
This is like what the Trump did in 1980s, yeah, to avail the tax credit.
Yes. Right? So $40,000 each year over the period of 5 years. But good, one thing you need to remember, you need to reduce that $200,000 from $1 million to consider as the basis of asset. Your asset base will reduce by the tax credit which you are planning to avail over the period of 5 years. That is something you need to keep in mind to avoid any double tax benefits. Why it is double tax benefit? If you do not reduce amount from the asset base, then you are claiming depreciation and you are already taking tax credit. So you'll be getting into double tax benefits. To avoid that double tax benefit, you need to reduce the amount of tax credit from the asset base. Make sense? Mayank, Garima, Rajat?
Yes, sir.
So far, so good?
Yes, sir.
Okay. So next one is work opportunity credit. So this credit is being available to the employer for hiring individual from certain target group. Like in India, you might have heard like the government of India have certain reserve quota for SC, ST, OBC category, right? Same way in US, they promote the employer to hire from certain target group, which are very underprivileged group, like who have consistently failed significant barrier to employment, right? For that, they need to file with the IRS form 8850, which is pre-screening notice and certification request for the work opportunity credit. So in US, if you are employer and you wanted to take any tax credit or benefit, so for that you need to first apply with the IRS and then you need to open up that scheme, right? So the government provide certain tax credit to the employer if they hire from certain specified targeted group, which are more of underprivileged group, right? So the credit will be 40% of the first $6,000 for one employee. That is 40% multiplied by 6,000, that is $2,400. And maximum credit is for 4 employees, which is 40% of $24,000, that is $9,600. So each employer can avail up to 40% of $6,000 for one employee, and maximum limit is for 4 employees, that is $9,600, right? And how this credit actually work? So 40% if the employee work for more than 400 hours in a year, right? If employee work in your company, in your organization for, let's say, less than 40%, but more than 25%, then, less than $400, but more than $120, then 25% for that employee. And if employee has worked for less than 120 hours in a year, then only 20% is allowed. So this slab you need to remember. So if employee has worked for more than 400 hours. So normally in a month we consider 160 hours, right? If I do simple math, if like employee has worked for 2.5 years in a month, then you will be getting a 40% per employee, right? And if employee is working with you for, let's say, 1 month to 2 months, right, then 25%. And if less than 120 hours, that means like 3 weeks. So like 40 hours a week, if you say, so less than 3 weeks, then only 20%. Make sense?
Yes, sir.
Reduce the wages expense for calculation of taxable income. So if you are taking the tax credit, then whatever the tax credit amount you are taking, you need to reduce that from the expenses to avoid double tax benefits, right? So maybe let's draw a small example on this for better clarification. So, for example, Mr. X is employer, or you can say sole proprietor, right? And he has, first case, 1 employee, and second case, you have, let's say, 4 employees. And this 1 employee has worked, let's say, 500 hours in a year. And this 4 employee, one has worked, let's say, 500 hours, one has worked, let's say, 300 hours, one has worked, let's say, 110 hours, and one has worked, let's say, 80 hours, right? So, so how much tax credit will be available to in this category? So here it is very much straightforward. 40% multiplied by $6,000. How much is it? $2,400, right? So in this case of scenario, at the rate of 40%, in this case of scenario, 25%, in this case of scenario, 20%, in this case of scenario, 20%, right? Multiply by 6,000, 6,000, 6,000, 6,000. How much is it? 2,400. What is 25%? 1,500. What is 20%? 1,200. What is 20%? 1,200. Right? So total is how much? 48 plus 5, 49, 59. $5,900. Right? Yes, no? Have I done the math right? $5,900. So this is tax credit.
Total is 6,380.
Say that again.
Total is 6,380.
Sorry, have I done math wrong? How much is it? So 24, 24, 48, 58 plus 5, 63, 6300. Have I done the math right? Yeah.
Yes, sir.
So $6,300 is the tax credit, right? Whereas my salary cost, let's say, is $50,000. Is $50,000. So then I need to reduce 2,400 from salary cost. Then I need to reduce 6,300 from salary expense. How much is the salary expense? 50,000 minus 2,400, 4,7,600. And what is this? This is 5,3,700. Oh, sorry, 4,3,700. Have I done the math right?
Yes, yes.
Right. So your expense in P&L should be this for tax purposes in your tax accounts. Right. You should not show 50,000 as a salary expense. You should not be showing 50,000 as a salary expense. Rather, you'll be showing reduced amount, because for this amount you are taking, tax credit. To avoid double tax benefit, you need to reduce that amount from expense, right? Because on expense, you will, if you have expenses, then you will be reducing from the income to reach at AGI. Yes or no? How you calculate AGI? Your gross income
By the
One is
deductions.
expenses or deduction,
Oh,
right? If this is, let's say, $100,000 and this is $50,000, so your taxable income is $50,000, right? If in this 50,000, this 2,400 or this 6,300 is there, that means you are paying less taxes, right? Because you are already taking the benefit as a tax credit. So for example, if tax rate is 20%, so tax payable is $10,000, right? So you'll be reducing this 6,300. So you are paying taxes, how much? 3,700 only. Instead of 10,000, you are paying 3,700. So you should not take double benefit of this amount. So that is the reason you need to reduce this amount from here. So instead of 50,000, it should be 43700. Make sense? Yes, no? Any doubt? Yeah, Vikas, Mayank, Vivek.
no, sir, not yet.
Clear, sir. Clear.
Clear? Okay, so far we have covered B point as well, right? Now coming to C point, which is research activity credit. So this is for qualified R&D expenditure. If you are a sole proprietor, right, and you are running any business, and that business you are doing some research and development expenditure. So in that case, those research and development expenditure are being eligible for certain tax credit. If in current year, research and development expenditure is more than previous year, so your R&D expenditure of current year should be more than previous year, then 20% of the current year minus previous year expenditure is being allowed as a tax credit, right? 20% of current year R&D expense or 20% of energy research, whatever, like both are being allowed as a tax credit. So deduction or exclusion of R&D expenditure must be reduced by the credit taken to avoid double benefit. Same way, for example, if you have incurred in current year, let's say $100,000, right? So let me see if I can draw it here. Yeah. So let's say in current year, you have incurred R&D expense of $100,000. In previous year, you have incurred, let's say, $80,000. So in current year is more than previous year by $20,000. Multiply by 20%. That is $4,000. So this $4,000 is tax credit for the current year. But mind it, this 4,000 you should be excluding from current year R&D expenditure to avoid the double tax benefit. So in your expense should be $100,000 minus $4,000. So in P&L, in your P&L, your expense should be $96,000, right? And your tax credit will be how much? $4,000. Make sense? Everyone?
Sir, could you please explain this again, sir? I'm not able
So
to.
I'm saying in the current year, you have made an expenditure on research and development of $100,000, right? In previous
Yes,
year,
yes.
you made $80,000. So in current year, you have made 20,000 more, right? Whatever the excess amount you have made in R&D expenditure from previous year, for that 20% is being allowed for a tax credit. So 20,000 multiplied by 20% is equal to 4,000.
4,000.
Right? So this is your tax credit. Right? So in the expenditure you have made is $100,000 minus this 4,000 should be reflected in your profit and loss account, that is $96,000. And this 4,000 you will be claiming as a tax credit.
Okay.
Similarly, how we looked at in previous example. Make sense, Mayank?
Yes, sir. Yeah.
Vikas, Vivek, Rajat?
Yes, sir. Yes, sir.
All good? Okay, let me just remove it. Okay. So, eligible small business may use the credit to offset both regular tax and AMT. So, we'll be discussing in chapter, in part 2, basically, about small businesses. So, as of now, just keep in mind, if in the question it has given to you, this is for small businesses, then you can reduce this amount from regular tax or as well as from the alternate minimum tax, both. The point is low income housing credit. So low income housing credit is basically for the construction company who build the housing society for lower income group, right? In India also you might have seen like government of India make housing society for the lower income group, right? So the company who are constructing those you can say housing society for the lower income group, they will get this tax benefit if they apply to the IRS with the form number 8586, right? So annual credit is equal to qualified basis, that is cost of low income rental unit, multiplied by applicable percentage rate issued by IRS every year. For this rate is being issued by the IRS every year. So keep in mind, this rate is revised every year based on their economic and other parameter conditions. Right? Make sense? So what they are saying, let's say you are a construction company and you have filed form 8586 with IRS and you are constructing a low income residential society, right? And there, like the people who are in lower income bracket would be living, or maybe like government will be allocating that place, or state government, city government, or maybe federal government might be allocating that place, or maybe like any other private, you can say like an NGO is developing that, like whosoever it will be, right? But you are a construction company who is helping in building it, right? In that case of scenario, whatever the cost you have incurred, let's say $1 million, let's say $1 million you have incurred in building that society. And let's say for the current year, the applicable rate is 2%. So multiply by 2% of this, which is how much? $20,000. So that will be tax credit available to you. Make sense? Yes, no? Are you guys with me?
Yes, sir.
Yes, sir.
So how much is the tax credit available? That is the percentage defined by the IRS every year on the total amount you have spent. Right? Now, if you see the note number 1, credit may be taken in each 10 year starting with the year of project completion. So that credit will not be available as and when you start. So credit will be available only when you finished it, right? And for the next 10 years, you can avail this, right? The recapture part of the credit taken if owner disposed of for the interest or violation some aspect, then original entitlement anytime within 15 years. So if you have availed this benefit, but you are not satisfying the condition in future, right, then you need to give it back to the tax authority, and income tax plus interest and penalty will be liable on you. Right? Make sense? Yes, no?
Yes, sir.
Okay, so next one is disable excess credit. Like we were discussing earlier, in the US, if any of you been to the US, you might have seen like at every place you will see specific, you can say, consideration has been given for the disabled people. Like if you go to the Walmart, you will see like separate parking space dedicated to the disabled people, right? If you go into the Walmart, you will see like separate gate has been given and has been constructed for the disabled people specifically. And if you go to their washroom, even though within the washroom, they have a separate washroom for the disabled people in men's as well as for the women's, right? All the infrastructure expenditure those companies who are making for to support the disabled people, they should get some tax benefits, tax credit, right? For that, this disabled excess tax credit is being available. The tax credit for making special constructional arrangement for ease of disabled people to come on work, like designated parking spot, entrance area, designated toilets, etc. Right? So for that, you will get credit of 50% of the expenditure you have made minus $250 or $5,000, whichever is lower. So this is 50% of the expenditure minus $250 or $5,000, whichever is lower. Let's say, for example, you have, let's say, open up a shop, right? In that shop, you have created a separate area or entrance from where like disabled people can come inside to your shop, right? And you have created a separate washroom for the disabled people, right? And you end up incurring, let's say, $10,000, let's say $15,000 for separate toilet and separate entrance in your shop for the disabled people, right? So in that case of scenario, how much tax credit is being available to you? Which is 50% of $15,000 minus $250. How much is it? Can someone do the math for me?
7375.
7375 or $5,000, whichever is lower. What is lower?
5,000.
$5,000. $5,000 tax credit is being available as a disabled excess credit. Make sense?
Yes, sir.
Everyone comfortable? Shall I remove the example? Right. So the note over here is credit is available to those small businesses that in preceding tax year had either gross receipt of $1 million or less or 30 or fewer full-time employee. The adjusted basis is reduced by the full amount. So this is also important, the adjusted basis. So your cost of building, which is 15,000, need to be reduced by $5,000. Make sense? Which we have discussed in earlier example as well, right? So next one is employer provide childcare credit, where employer encourage their employees to bring their kids into the office, and they then separate play area for them and separate nanny to take care of their kids, so that employee can work comfortably at the office premises. So in that case of scenario, 25% of the capital or operational cost for the child care incurred during the year, or $150,000, whichever is lower, is allowed. Right? Any credit based on acquisition or development of capital asset must be reduced. Same theory, right? Last one is earned income credit. So we are done with the general business credit. So if you've seen, so we have covered all the 6 categories. Investment credit for the rehabilitation, that is for capital expenditure for building, commercial building, industrial building, or historical building. Work opportunity credit is when you are giving work opportunity to underprivileged society or underprivileged people, right? Research activity, when you do the research and innovation more than previous year. Low income housing credit is when you spend amount in constructing the housing society for the lower income group. Disable access credit is when you make a constructional change for making it easy for disabled people to come and work in your organization, right? Next is employer provide childcare services, when employer create a separate facility where employees can put their kids to play around, and they have facilities to take care of their kids, right? So these all comes under the general business credit, right? Now the next one is earned income credit. So the tax credit for lower income worker who have principal resident in US. So this is for the people who have principal residence in US. So the credit is being claimed for each qualifying children. So if you have no children, then minimum credit is $538. If you have 1 children living with you, you can take $3,584. If you have 2 kids, then you can take credit of $5,920. And if you have 3 or more kids living with you in the same home, you can take a credit of $6,660, right? And this also pays out if your income is more than $15,820, $41,756, $47,450, $50,594. So your income will, you can say, if your income is more than this, then there is no benefit. And for married filing jointly, there is again additional benefit for the phase out, which is 21,710 if there is no kid, 47,646 if there is 1 kid, 53,330 if there are 2 kids, and 3 or more kids, then 56,884. Married taxpayer who does not file joint return is not entitled for earned income credit, and child must be under the age of 19, full-time student under the age of 24, or permanently or total disabled. Make sense? Or you want some clarification in this? Why it's so silent? So let's do some practice. Shall we do some practice question? What happened? Are you guys with me? Hello?
Yes, sir. Yes, sir.
Are you guys here?
Yes, sir.
Okay, shall we do some practice question? Robin is preparing her 2021 income tax return. She has figured her income tax and is now ready to see if she is entitled to any tax credit to reduce her income tax liability. Which of the following item could be the source of tax credit that she should gather from the information on to see if she is entitled to any tax credit. So Robin, she has prepared all her income tax detail, but now she wants to understand from you what all documents she should look at it to identify the area where she can avail any tax credit. First one is child and dependent care expenses, education expenses, foreign taxes if she has paid, or all the answers are correct.
Option 4.
Huh?
So option 4.
Option 4. Why?
So
Because tax credit is being available for the child and dependent care, foreign education expense, as well as to the foreign taxes paid. So simple answer. Yep. Mayank, Rajat.
Yes, sir.
Vivek, Sachin. Got it?
Yes, sir. Yes, sir.
Second question. Carlo, an individual taxpayer, received a form 1099 DIV. 1099 DIV means dividend income, from where you have received dividend income from her global mutual fund that show a dividend income of $500 and foreign taxes withheld is $67. So Carlo has mutual fund from a foreign company in which he has received $500 as a dividend income net of withholding tax of $67. This is the only foreign source of income she received for the year. Her income tax before any credit is $4,320. On which of the following form may Carlo elect to claim the credit of foreign tax paid? So which form she should file to claim the foreign tax credit? Form 1040 Schedule A, itemized deduction. Directly on Form 1040, tax and credit as a foreign tax credit, or Form 1040 Schedule B by electing to reduce the dividend income, or 4 Form 1040 line number 68, that is other payment with a disclosure statement. So maybe if you go and see the form, do you have taken a print of 1040? You guys have idea how 1040 looks like now? Or you still not clear on it?
Yes,
So
sir.
this
Yes,
is
sir.
your form number 1040, right? So what all 4 options were there? If you see the first option, they are saying Schedule A, itemized deduction. So in the Schedule A, itemized deduction, to remember this Schedule A of itemized deduction. So from Schedule A, would you mention foreign tax credit here in line number 12? Yes or no? Are you guys with me?
Yeah. Clear now.
So, no, do we mention the foreign tax credit in itemized deduction, Schedule A? Yes or no? Yes or no?
सर डिस्टर्बेंस क्या हो रही है काफी डिस्टर्बेंस लग रही है
Sorry?
डिस्टर्बेंस हो रही है मतलब काफी शोर की आवाज आ रही है
I think someone is traveling
Okay.
and is on unmute. Yeah, so my question to you, where we will be putting this foreign tax credit? So it will come over here in the form number 1099 here, right? So if you see, the option is foreign tax credit will directly come to the form number 1040. It will not go in the itemized deduction, right? It will neither not go into the dividend income, and it will not go into the other payment. Make sense? You need to, like regularly look at form 1040 to make yourself familiar with it, because like most of the question coming from form 1040 in the individual taxations, right? So last question of the day. Tom and Mary both were employed as bookkeeper during the year. Tom earned 125,000 and Mary earned 122,500. They had no other form of income. They paid $2,000 to Child Care Nursery INC for the care of 4-year-old son. Tom and Mary filed joint tax returns claiming their son as dependent. Which of the following is correct with respect to child tax credit? So Tom and Mary are husband and wife. They are filing joint return and they have paid $2,000 for the child care expenses. So the goal of the question is, which of the following is correct with respect to child tax credit? First one is, the couple is not entitled to claim. Is the couple entitled to claim? Is the couple entitled to claim for child tax credit or not? What is the threshold limit? $400,000 for married filing jointly?
And 2
Yes,
lakh for
no?
the 200,000 for the others, right?
Yes, for individual 200,000, but they are filing jointly. So $400,000. So their total income is 125 plus 122,500. It's less than $400,000. So first answer is wrong.
No.
Make sense?
Yes.
Make sense, right? Second answer is, Mary is eligible to claim the credit only if she files as a married separate. Let's keep it on hold. Third option is, the couple is entitled to claim standard child tax credit, but not the expended child tax credit. So there is no term expended child credit. So this option is wrong. Fourth one is, the couple is not entitled to claim child tax credit because both the spouse have earned income. So that also wrong, right? So now, this kind of tricky options may come into your exam, right? Second option is also, you might not be comfortable and confident. In that case of scenario, you need to select the best right answer, right? In option, it will not be always the perfect right answer. So you may need to choose the best right answer. If you look at the first, third, and fourth, they are absolutely wrong, right? But now look at this. But now look at the second one. Mary is eligible to claim the credit only if she files as a married separate. So if she is filing married separately, can she claim the child care credit?
Yes, sir.
Yes, sir.
Right?
Yes, sir.
So this is the best right answer, not the absolute right answer, but is the best right answer. Make sense?
Yes.
So these kind of tricky question may comes into your exam and you should be careful about it. So now if you see, we have covered all the tax credits. Even though we have covered more than what is in your book for individual taxation, because all the general business credits are part of your business taxation, but I thought like it may be good if we covered over here, and in second part we'll do the revision, right? So we have covered all child tax credit, child and dependent care credit, credit for elderly and disabled people, right? Then credit for adoption expense, credit for contributions, and then education tax credit. Then we covered foreign tax credit, general business credit, and then earned income credits. All kind of tax credit we have covered, and then we have done a couple of examples as well, right? So more than 85%, more than 90% of your chapter 1 is done, right? So maybe
Sir,
like, yes, please.
Sorry to interrupt, sir, but could you please share the recording of today's class because it requires another session. For
Say that again. Recording
Could you-
of.
the today's class, it's a much important class today, sir.
Okay. 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 I'll
Yeah.
send it to you. Good. Good. No problem. Okay, guys. Any doubt you have before we close for the day?
Sir, kindly send the recording of all the previous classes, please, sir.
No, that's not fair.